Cashflow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Good evening, everybody. Welcome to Oregon Cashflow Pro. My name is James Barber. I'm here to help you maximize your cash flow. Kyle, how's it going? How's it going? BDN, what's up? So, it's been a long day already. We've been live streaming all day for the most part. I just had a little bit of a break between streams because I'm here for you guys on Wednesday to answer your questions about finances. So, if you've got questions, we're going to do our best to stick around and answer them for at least an hour. Top Gun, how's it going? How's it going? Kyle, how did Tesla earnings go? Yeah, they went really good. Tesla blew the numbers out of the water. Crushed it. Crushed the expectations. So it was really neat to see that. We'll see how the share prices react. But things are looking good as far as Tesla and the company operating as a whole. So that was pretty neat. Kyle's good. I'm good. I got a little more sleep than usual last night. Shares going to 460 tomorrow. That'd be nice. That would be nice. I'm ready for it. I'm ready for it. Absolutely. You get no sleep? How's your eBay shipping going? Does that keep you up all the time trying to keep up with your orders? Or do you do mostly drop shipping? We've got a little, I've got a low latency this time, so only a few seconds delay in our stream. Top Gun, how are you doing? Kyle says, need to keep putting more into the market. It's an addiction. You need freedom more than you want to breathe. Yep. You kind of get focused and obsessed. But I bet you enjoy it. I bet you get some enjoyment out of it. Although sometimes if it is to an addiction level, maybe you don't enjoy it so much anymore. So I'm going to, we didn't get any live voicemail, or we didn't get any voicemail recordings, but I'm going to pull up the, some questions that we had throughout the week, and I will answer them on here, as well as get to your answers in the comments. So if you have any questions that I can help you out with, if there's a problem you've got, I will do my best to help you solve it. Kyle, shipping so hard, you have 70 large boxes, you have to find items that are scattered in different boxes. That's the worst. Make sacrifices early or your whole life will be a sacrifice. That's right. That's right. I mean, it definitely helps. It definitely helps. BDN thinks the market's kind of slow. Maybe the election. Yeah, there's definitely a lot of uncertainty around the election, which is creating a lot of uncertainty in the market. Absolutely. Top Gun, forgot to call in and ask a question. Well, all right, that's everybody's loss then. All right, let's... That one's not a real question. Kyle, my eBay is going great. Now I have someone listing your items, taking photos. Now you just have to source and ship. I'll still list and do more as you need to expand as fast as possible. Good for you. Good for you. One of the hardest things to do as an entrepreneur is to give up some of that control and delegate. Delegate. But that is what the most successful entrepreneurs do. They learn to delegate. The sooner you learn to delegate, the more your time will be freed up. Automate and delegate. Those are the two things. Those are the two keys. Automate and delegate. So this isn't a question, but we had owner OP77 said they use a $15,000 personal line of credit, knocked out $40,000 in principal their first year of doing dynamic or velocity banking. Stay committed and disciplined. He recommends having 3 to 6 months as an emergency fund put away before incorporating velocity banking. So I disagree with having 3 to 6 months saved up before you start doing velocity banking. I think everybody can benefit from doing some type of velocity banking immediately. It's just a matter of what's going to work out best for you. There's some people that can't qualify for a line of credit. I wouldn't tell them not to do velocity banking. We just have to figure out a different way to do it so that they can maximize their cash flow. Most people have access to credit cards. We can do something similar with a credit card. It's not ideal, but we can make it work. We can also figure out how to offset interest on credit cards as well by doing dynamic banking and moving most of our cash flow, at least everything that we can spend on a credit card, using a credit card, if we use the credit card, if we anticipate that for our bills, then we can put that chunk of our income into the credit card and have it offset those interest charges until we make those expenses. So we can do paycheck parking at least partially inside of a credit card. So you definitely don't have to wait until you have 3 to 6 months emergency fund. You don't have to wait until you get a home equity line of credit or a line of credit. There are other ways you can maximize your cash flow. So check out the videos that we do on that, or sign up, have a meeting with me, and I will help you figure out the best way for you to do that. Keep in mind, I give 20 minutes free to everybody. You just got to sign up at my Calendly link, calendly.com/cashflowpro, and we can help get you sorted out. Kyle says, yes, it was hard at first. They don't take pictures as well as you, but oh well, volume. That's right. Kyle, can you explain real quick why dynamic banking is better than putting all your money in the stock market, and make sure you take it out and buy the dips if it ever crash? You can do dynamic banking and put your money in the stock market. In fact, it allows you to put more money in the stock market a little bit quicker. Because what we do when we do dynamic banking is we take a line of credit. So we're borrowing. The first thing we do is we borrow someone else's money. We borrow someone else's money and we pay down a debt, or we make an investment with it. And in this case, you're talking about the stock market. So you could take a chunk out of that line of credit and put that into the stock market, start earning right away. I'm assuming if you're going to do something like that, that you have a plan, a mostly foolproof plan to make some profits off of it. Or at least you don't really have to. If you're at a point where investing is your main goal, that's not really that big of a deal. But once you do that, so rather than your income putting a little bit at a time into the stock market, you got to put that whole big chunk in right away. And then your paycheck, all of your paycheck goes into the line of credit, offsets those interest charges. So you're using someone else's money and you're only paying a little tiny bit of interest on it until you start paying your bills off. And as you pay your bills off, the amount of interest goes up because your balance is going up. But a line of credit works to where you only pay on what you're borrowing that day. It's your average daily balance, what you get charged for interest. So by putting your whole paycheck into the line of credit, you're reducing that average daily balance. Meanwhile, in the stock market, you've got all of those funds working for you in there. So Kyle says, like, actively manage your portfolio. And dynamic banking is good if you don't need a line of credit. Why do you take a line of credit in the first place? The reason to take the line of credit in the first place is so that you can use other people's money for free. That's the whole point of it. Otherwise, you're waiting for your income to come in before you can start using it. In this case, we want to use somebody else's money. And then when our money comes in, we get to work it down. We're going to offset those interest charges. Where do you get a line of credit? You can get a line of credit at a credit union or a bank. Those are two Those are two places that most people try to get a line of credit. And you can get a line of credit for yourself. You can get a line of credit for your business. You can get a home equity line of credit or a personal line of credit or a business line of credit. Those are basically the three main types of lines of credit. I love lines of credit. Lines of credit allow you to put your money to work for you wherever you need it to, and it helps to provide you with a little bit of emergency funds if needed. So you can basically not have to carry so much cash. You don't have to carry so much cash. You don't have to have a home to get a line of credit. You would have to have a home to get a home equity line of credit. But you can get a personal line of credit or a business line of credit. You would be nervous putting owed money in the market. Well, you don't think of it as owed money. At least I wouldn't think of it necessarily as owed money. But there are other places you can put that money if it makes you less nervous. But the reason it's not owed money, it's money that you're going to have coming in because you're going to be putting your paychecks in there and offsetting the interest charges. So you're just using your money before you get it. You're using your money before you get it. You don't necessarily want to do it if you don't know what money's coming in, right? You don't know where to put your money besides the market. That's where you've got to check out my life insurance policies that I talk about. The infinite banking policies that I design is a great place to put your money. It's not going to earn you as much as what you have in the market. In fact, it only will serve as a replacement for like what you might normally keep in savings or checking. But it provides you with a death benefit. It provides you with a safe place with guaranteed growth that's higher than a checking or savings account, and you still have access to those funds. So what I've done is my first thing I do to build the base of my financial pyramid is I started these policies. I have a bunch of these policies, and I have a whole bunch of money that I've put into them. And then I borrowed that money out, and now I have some of that money in the stock market that I'm playing around with. So I'm paying a little bit of interest to the insurance company to borrow against those funds, but I still have guaranteed growth in those policies. So those policies, as soon as I put my money in those, it's guaranteed compounding interest for the rest of my life. What I do with it when I borrow against it and I pull it out, hopefully I'm doing that in order to buy cash flowing assets. That's like the number one preferred use of it. All right, you finally understand. Nice, nice. So that's the preferred use of it, is to pull the money out to maximize that cash, the use of those funds. But when you pull it out, you still got money sitting in there that's working for you. And ideally, well, there's a couple of different ways that you can do it. There's some policies where they'll ignore that you took that loan and you'll still earn the dividend rate regardless of whether you had a loan. And there's some companies that will just give you a credit of the same amount that you're paying in interest. So it's a way to ensure that you're getting that compounding growth for the rest of your life. And the sooner you start that curve, the bigger it's going to be by the time you get to old age. And then you pass on a legacy. So it's a really great way to do it. And at your age, you should definitely consider it. I highly, highly recommend young folks get into doing this because you have so many years of compounding ahead of you. So many years. And it shouldn't stop you from doing other investing either. It should not stop you from doing other investing. This is not a replacement for an investment vehicle. This is in addition to. In addition to. You'll always know that you have your money working for you in these policies in the background 24/7, regardless of what else you do with it. So yeah, they're really cool. Somebody asked, what IUL carrier do I own and that I demonstrate on my videos? I own 2 different IULs from different carriers. I own National Life and I own Allianz. Both of them have really good IULs. They serve a little bit different purpose. National Life has some living benefit riders that are great, and Allianz has the best growth potential when it comes to the IULs and the indexes that they offer. So that is why I have both of those types of IULs. Kyle asked, do I think Virgin Galactic, or SPCE, will be a $100 stock? I have no idea. I have not done my research on that. But if you listen to Henry the Patriot in our live streams, he believes it 100%. As soon as they start flying some rockets. Now, once they start flying some rockets, yeah, I can see it being a $100 stock. Getting to there is the hard part. Kyle, what about small cap stocks under $5? Don't companies go from $5 to $100 all the time? I don't know if they do it all the time. There's a reason they start out very low. When they're low, they're still growing. And they've got a lot of hurdles to cross before it gets up to $100. And it can take a long time too. And there's also a lot of companies that go backwards. So a lot of companies go backwards. So yeah, I don't know. I wouldn't say that companies do it. Well, I wouldn't say a lot of companies do it all the time. Certainly some companies do it. And then you get other companies, I guess, that don't ever start off at $5. They'll start off higher. Kyle thinks there's a few telemedicine companies will go to 100 if you pick the right one. There could be. Telemedicine has a bright future ahead of it. Bright future, especially if we get an internet everywhere and people keep moving out of the cities, keep moving out into the rural areas where we don't have a lot of personnel, where we don't have a lot of hospitals. That'll be big for telemedicine. People can just get the care that they need without leaving their house, or at least get checkups and follow-ups without having to leave their house. And even those rural hospitals can benefit from telemedicine because they could just buy a robot, and a doctor from a city, or a doctor in a city, or a doctor in another rural place can perform surgeries utilizing the robot. And that doctor could do a job at 10 different hospitals in a day if that was what it took, and they just did it all remote. So yeah, could be really big. BDN says not Hyliion. Don't think Hyliion's going to make it to 100. Kyle says CloudMD to acquire Canada's largest medical directory for $1.95 million. CloudMD may be one of those. I don't know. Speak to your financial advisor. LOL. Nice. Hyliion may be in your next life, BDN says. Hey, BDN, I have a question for you. Did you get a chance to try out the full self-driving rewrite yet? And if so, what do you think? Do we got a hit in front of us? Inquiring minds want to know. You were at the Fremont factory a while ago. Henry, what's up? Round 2. Yep, round 2. This is Wealthcare Wednesday live stream. We do it every Wednesday, 6 o'clock Pacific time. And this is where we just talk finances. Maximizing your cash flow. No, not Tesla based. I pretty much welcome any questions, but I don't want it to be dominated by Tesla questions because it's mostly about helping people eliminate debt, grow their wealth, maximize their cash flow, things like that. Help their business. Business questions can work too. Kyle says, I also like very good food company. They sold out for weeks and can compete with Beyond Meat. They're opening a new manufacturing plant to keep with demand. Nice. BDN said there's a hiccups in terms of getting the FSD rewrite into your 2018 M3. Oh, bummer. It's still on hold. Ah, that's a bummer. Well, hopefully you'll get that. Hopefully you'll get that pretty soon. I was hoping we were going to be able to get the inside scoop. Henry thought he saw the preview on YouTube said Tesla. That's for tomorrow morning. That's for tomorrow morning. So I did put up a preview for tomorrow morning's live stream, which has Tesla on there. BDN said there were a few folks has the same problem. Kyle says, asking, you think space is going to $100 and how long? Henry loves to talk about space, so that is the man to talk. That is the man to ask. Henry said tonight was very exciting. Yeah, it was. I enjoyed that a lot. I thought that was a great conference call. Good questions asked. For sure. Kyle says, what about Pfizer? This is the only company that hasn't ran up. I have no idea. Is that the one you're thinking is coming out with a cure for COVID or vaccine? All right, William said, he did have a question at the end, but he said he has an L95 Guardian policy. He's fully funded the policy for 2 years, and he's in his second year of the policy. His agent said he would reach break-even between years 6 and 7, just as I mentioned. I have a term rider, and I put a total of $70,400 per year into the policy. I was told I currently have $122,000 cash value available for loans. I plan to fully fund the policy for the next 10 years. I will take out and repay loans often over the decade. Are there any concerns that this policy might run into any types of problems over the next 10 years if treated in that manner? No, there is no concerns. That is exactly what we would like to see you do with those policies. As long as you max fund it and you're hitting your MEC limit, these policies are going to work really well, really well. And the key is, the reason we talk about max funding it is because you're getting as much money in as possible above the cost of that insurance. So in your case, $70,400 per year. $70,400 per year. You could actually put a little more money into the policy, I would guess, because it sounds like you have a little higher mech space than that. And after 2 years, you've got $122,000, which is about 86% cash value. And if you are max funding it, you should actually be over 90%, or at least right at 90% after 2 years. So or maybe the policy wasn't quite 100% efficiently designed. But I would actually guess, since you plan to fund it for 10 years, that you have a little higher death benefit, which increases your MEC limit, and you could actually put more money into that policy in the first 7 years. You may not be able to put the same amount. You may not be able to put $70,400 a year for 10 years if you put more in early. But when you put more in early, it'll reduce the amount you put in later, and you're still going to have more cash value than if you spread it out over those 10 years. So it's a pretty neat way to go about funding your policy. Henry says, I think the most amazing trades I will ever make in my life are the January 2021 for Workhorse and Space Call. Space will fly and USPS will award before Christmas. All right. Well, let's hope that's what happens. What price did you pay for Workhorse? Kyle asked. Henry says he's loading up on calls for both this Friday. Yeah, I need to pick up some more workhorse ones. That would be good to look at the January ones. I have a couple of long-term workhorse calls. I paid a little more for them, but I'm using them to do covered calls. And I was just planning on doing that until the announcement. But I don't need to go out as far, so I'll have to look and see what I can pick up in January. I bet that would be a pretty good buy. Henry says it's a gift price right now. Kyle says, thanks, Henry. You're the man with the plan. Anthony Thomas, evening. Is there a way to transfer a 401a to life insurance without being taxed? I am not familiar with a 401a. I'm not familiar with a 401a. For the most part, you can't really fund a life insurance policy without it being taxed. But I'm assuming, I remember reading about a 401a just the other day, but it was only briefly. If you can, remind me how you contribute to the 401a. Is that company money, business money gets put into something like that? Basically, if you can borrow against it, you can fund your life insurance policy and pay it back. Yeah, I mostly know about 401ks, 403bs, 457s, regular, typical retirement accounts like that, traditional IRA, Roth IRA. So you'll have to remind me what a 401a is. Henry says, every Friday I'll buy space and workhorse. Kyle, wait, what do you say you're buying? Oregon, what calls for workhorse? Oh, the same ones, Henry. The ones I was buying were long-term ones. So January 1st or January 2023. Really long ways out there. That way there's a long time for them to become profitable. If you think that a company is going to be great in the long term, Anthony, yeah, I know it's a retirement account. I know the 401a is a retirement account. I just don't know much about them. Well, the calls from 2023 are a lot more expensive than the calls in the short term, but you can basically ignore the ups and downs. BDN says it's for the self-employed. Huh. Oh, you're asking about this 401k. Yeah, you can get what's called a 401, or you can get what's called a solo 401k, BDN. Solo 401ks are for if you have a business and it's just you, if you're the only employee, you or your spouse. You can have you and the spouse be the only employees. A solo 401k is essentially a regular 401k, except you just don't have employees, so you don't have to match. You don't have to match benefits to employees. So if you end up getting employees for whatever reason, you would get them under another business. But a solo 401k is you keep checkbook control. You could basically do whatever you want with your retirement account money in that case. That's what we have. We have a solo 401k. And it's been great. It's been great. But you got to keep track of it. You got to keep track of what you're doing with it. Essentially, you're going to be the administrator of the account. So I'm the administrator of our account. I write the checks. I receive the checks. We have a trust that it's in. In terms of tax, it works the same way as any other 401k. Except you as the owner, you have the ability to put a lot more money into it because you can decide how much you want to match from your company. I believe there's a limitation of 25% of whatever the revenue is. So you have to, in order to max fund the 401k, you're going to need like 100,000 or something of revenue. So that way 25% of that, the business can contribute, 25 or 27,000, somewhere around there, and then you can contribute 19,000 or 24,000 or somewhere around there. Which solo 401k administration do I use? I administer it myself, but I got it through maverick401k.com. And they did all the paperwork. They set me up. If I need a loan, I'll just do a request online and they'll send me the paperwork to sign. And that cost me, it was something like $500 or $700 to set it up. And then it's $170 a year or something like that. Pretty inexpensive to maintain it. Pretty inexpensive. Henry buys as many calls as he can afford every payday. You're a few trades away from your goals. Nice. You trade for short-term scores so you can get the F out of here. Let me see if I was missing a question up here. Kyle says, okay, he sees. He's buying Workhorse and Spaceballs. Henry, I think we have about 7 to 8 more weeks before Workhorse explodes. 4 to 6 weeks from space going parabolic. Kyle says, Henry, I love you. I'll send you a gift after the explosion. There you go. And he dropped his Cash App. That's awesome. All you do is make your friends money. Work for tips. That's funny. Top Gun, 56K annual contributions for 401k. There you go. Yeah, but it's got to be split up between the two somehow, between you and the business. So what was that split? It's 1935. No. It's got to be like 25 and 31, something like that. It was increased to 57K in 2020. Oh, okay, thanks. Yeah, Top Gun's got it. You got a solo 401k too, right? Kyle, you're buying January 2021, right? That's what I've been buying. I think Henry's been buying some of that one too. Henry says, tipping is not a city in China. Henry says, yuppers. Also November 25th for the gains on space. Wonder what's the November 25th? Just because they're cheaper? Lil Thad, Tesla hit 500. Well, we're hoping it's going to hit 500. It didn't hit 500 before the end of day today. But we definitely expect it. Oh, Top Gun. Haven't started yours yet. Just a self-directed IRA. Gotcha. Now, Top Gun, is that what you have your stocks in? Your self-directed IRA? Is that so you can do some trading? Because I am planning on putting my strategy into the mastermind group so that you guys can all take advantage of it. If you want to take advantage of it, but that's where I'm going to be putting it. The advantage of being in the mastermind group. I don't know if I'll put it out beyond the mastermind group. I was thinking I might create an extra tier below that one in case people only want to get access to that but don't really want to join the mastermind group and be a part of a larger group of folks who are all trying to achieve financial independence and working with each other to do that. So I'm still kind of still trying to think of how to go about doing that. Top Gun, you haven't done it. Okay. Henry, max gains from the first test flight will be those calls. November 27th, he believes. Top Gun, I'd like to see how you do stocks in your SD accounts. Yeah, I'll show you. Oh, I don't do any stocks in the 401k yet. I don't do any stocks in the 401k yet, but I am planning to. When I started the 401k, the solo 401k, the plan was to just loan it to folks who need help getting out of credit card debt, help them get to 0% credit cards. And I did that. We've done a whole bunch of that already, but now I'm ready to start putting some into some self-directed accounts. So ready to start putting it into some stocks. Now that I've educated myself in that arena and I feel confident that I can do it profitably. Rajiv, what do you suggest for 401k? If someone going back to home country and will not be returning back to the USA, should you withdraw your 401k money? Oh, that's a good question. What kind of access would you have to it? I imagine you can access it worldwide. There may be some challenges though, depending on what countries you go to. If they'll limit your ability to actually get to the money. So what I would do is look into having a bank account with a bank that's in your home country or one that works worldwide. India. I'm not familiar enough with the banking systems as worldwide, but I would look into what banks are good for currency exchange, which ones you can do really easily, and make sure that it's connected to your 401k account. You might be able to move your 401k into, well, let's see. Actually, what you'll do, if you'll move it to a retirement account first. You'll move it to an IRA first. I probably wouldn't leave it in the 401k. I would roll it over into an IRA. It's set to you and it's not reliant on the company. And you'll have greater access to it. So you can turn it into a self-directed IRA, which is what a lot of us are doing here, self-directed accounts. So you can do trading yourself if you want to, but it also gives you the access to request the withdrawals really quickly and more easily. So you can do that and connect it to that bank that you're going to have that's worldwide and has good exchange rates, or makes it very easy to get currency exchange. So those would be the things that I would be trying to do. That's what I would be trying to do. Henry thinks tomorrow space should dip even more. It dipped a lot today. It was down to like, the calls that I've been loading up on are down to like 22 cents, something like that. Henry's, why is space dipping? Kyle asked. People think there's a flight tomorrow when it was a launch window, so a lot of selling I think tomorrow when there's no flight tests. Gotcha. He strongly believes Friday will be an excellent time to load up on space and Workhorse. This is his strategy. Sell his Tesla calls on Friday or Thursday and get Workhorse and space. Plus not paying your car payment or electric bill on Friday. Today was brutal, he said. Yeah, but it's going to pay off tomorrow. Rajiv, you're welcome. You're welcome. I hope it helps. Check back in and let me know. Because I'm always interested in learning. I'm always interested in learning more. Obviously, I just made some suggestions. You're going to have to be the one that researches that, looks into what you ended up having to do. So, yeah, check back in. Let me know how it goes. Henry says today it dipped because that. Yeah, I'm not going to repeat that on this one. Oh, good. Kyle, what does Workhorse do? Workhorse is looking to get a bid to build some electric vehicles for the United States Post Office. But yeah, they build electric vehicles. And it's a certain type of electric vehicle. It's built for like the last mile type of vehicles where they don't need to have the huge range that that the Teslas have. They're just meant for businesses to serve that last mile. At least most of it. I mean, maybe they'll come up with something else, but that's essentially, I think, their current niche. All right, let's see. Get some more questions up here. We got about 20 more minutes. And then I'm gonna try and get done here right around that hour because it's been a long day. It's been a long day. And I do need to make a phone call. Somebody needs a meeting with me before Friday. So I'm going to put in a little after hours tonight for that. What is going on? Both of my shoes were somehow just untied. Kyle, holy smokes, electric cars for businesses. Yeah, electric vehicles. You got it. Delivery vehicles. It's all about delivery vehicles. If we can get those electrified, it'll take a lot of internal combustion engine vehicles off the road. Henry says, basically they're replacing the post office trucks, you know, the Jeeps from 1950s that they still use. And the ones that are catching fire a lot these days. There's been a number of fires. Yeah, built by Grunham. BDN says U.S. postal trucks are right-hand drive like the UK. That's right. Anthony, why are you using IRA instead of putting all monies into insurance? Depends on what you're going to use it for. My goal is to put all of my income through my policies. And from there, I'll deploy it. And one of those places that I've deployed it to is an IRA. So I have a Roth. I took $6,000 out of my insurance policies this year and I put it into my Roth. And now that it's in my Roth, I'm playing around with the stock market with it. So I'm choosing which things to invest in, with the goal being I'm going to make a greater return than it's costing me to borrow from my policies. Meanwhile, my policies are still going to keep compounding. So I'm just going to worry about paying the interest charges on that each year. And in the end, I get the win on both sides. I get tax-free growth in the policy. I get tax-free growth in the Roth. And I get that death benefit that ensures my legacy. Ensures a legacy gift to my kids. So win, win, win all around. The key is you want to make all of these dollars do multiple jobs. So I don't want to just leave it in the insurance policy, because then it's only doing a couple of jobs, getting me a death benefit and growing. It doesn't start to do more work until I pull it out and I put it to use. So that's the plan. I want to get these dollars doing multiple jobs. So Dylan asks, he said, he just recently discovered my channel, been thoroughly researching the infinite banking strategy, and I mentioned on one of the videos about a HELOC, which he currently uses to fund all revenue expenses through, since it's much more efficient that way to pay down his house mortgage. He says it's been a game changer for him, but it definitely doesn't offer some of the benefits that infinite banking does. Tax-free interest, dividends, death benefit, etc. The question he's been wondering is, does he need to choose one or the other, or can he do both strategies? So absolutely, he can do both strategies. So what he's talking about is doing dynamic banking and infinite banking. And can he do those together? And yes, I made a video on that about dynamic banking and infinite banking. But if you want to maximize your cash flow, that's the way to do it. Maximizing your cash flow, you're going to use both of those. Your infinite banking policy can work like a line of credit, but it's not very quick to get money in and out of it, especially depending on which company you go through. Some carriers take longer than others. Mass Mutual mails me a check when I get asked for a loan, and it takes 7 to 10 days to get that check. Guardian, I put in a request and I got my money in a day and a half later. So almost the next day, because I think it was after 5 o'clock when I put in the request. Maybe it was 4 o'clock when I put in the request on one day, and then I didn't get it the next day, but I got it first thing in the morning the day after that. So that's the fastest I've gotten a loan from a policy. But that hinders your cash flow a little bit. I mean, it hinders my ability to offset interest charges to the max. With a HELOC, I can move money in and out in seconds. So that's what I do. I like to use a line of credit in order to move my money very quickly, knowing that money is on its way or going to my life insurance policy as well. But that is the way we maximize those. Top Gun, if you know how to work your solo 401k, you can earn everything tax-free earnings for life. You can take distributions and fund your policy. That's right. That's right. Well, I don't know how you're going to take distributions without paying any tax. If you're taking the distributions from your 401k. You might be able to do that. Somebody's going to pay tax eventually on that, though. It just may not be you. Top Gun, does Mass Mutual have the most flexible 90/10 policy? No, it does not. It does not. Oh, yeah, Roth Solo 401k. Correct. Correct. You're absolutely right in that case. Mass Mutual does not have the most flexible 90/10 policy. Mass Mutual is not very flexible when it comes to what you have to contribute to the policy. They want to know as a company, how much are you going to put in each year, and if you want to put in more than what is scheduled, you're probably going to have to go through underwriting to do it. So to me, that's not very flexible if they're not going to allow you without you qualifying health-wise. Guardian does not require that. So we can set you up with Guardian to make the minimum payment, the base premium, and you can put in all the way up to the MEC, so potentially 10 times the base premium throughout the rest of the year. Top Gun, heard they're changing their PUAs to let you make catch-up payments. Yeah, well, you could make catch-up payments. They didn't change anything there. You can make catch-up payments. So they are flexible in the sense that if you sign up to do a $30,000 a year policy and you only put in $10,000 one year, the next year you can catch up. So you can catch up with Mass Mutual. Where they did limit you, though, was over the course of 3 years. If your average wasn't a certain amount, they would reduce what your max is that you can contribute without having to go through underwriting. So that's where they're less flexible as well. So maybe they're going to be changing something in that regard. I hadn't heard about that. So Kyle says, hit that like button. Yes, please. Top Gun. So Guardian has more flexibility? Yes. Guardian is the most flexible whole life provider that I'm aware of. Almost as flexible as IULs. IULs, basically by regulation, offer the most flexibility when it comes to contributions. Guardian is very, very close to that flexibility. So yeah, Guardian is the place to go if you need the flexibility. They don't have as high of a dividend return right now. It's 5.65 compared to 6.12 or 6.2 for Mass Mutual, 6.1 for Penn Mutual. So when we do illustrations, it's not going to look as good, but dividend rates change. Guardian is one of the top two historically, so especially over the last 25 years, Mass Mutual and Guardian, top two. Some years over the last 25 years, Guardian paid the highest dividend rate. Most years, Mass Mutual paid the top dividend rate. But they can change places, and they do. So I don't usually look at the dividend rate as being the number one factor when we decide what policy to use. I go with which one offers the most flexibility that can meet your needs. Because if you don't have the flexibility, you're not going to be able to commit as much of your money to that policy. The reason I'm able to commit so much of my income to these policies is because of the flexibility in the Guardian policy. So I have large policies through Guardian, small policy with Mass Mutual, small policy with my IULs. Now IULs, mostly that's because one of the IUL companies, you can't access the money in the first year. which really limits how much I can put in at one time because I don't like to tie my money up for a year in those. The other one, I just started it, and I just have it on my kids, so we maxed out that one right away. And you can't really get large policies on your kids because the death benefit adds up so quickly. It adds up so quickly. So we do what we can with what we're limited to. All right. Key, how's it going? If you want to use policy loans in the long term, is there a real difference between a company that is direct recognition versus non-direct? Good question. Good question. I don't think there is. I don't think there's much difference. There can be some difference between the two. But it's going to depend on the overall interest rate environment that we're in. In the interest rate environment that we're in right now, I'm not seeing much difference. You could end up, because of the difference between direct and non-direct, that can affect the overall dividend payout in general. So it's over the course of time, you can't just say one method is better than the other, because yes, it may not affect you getting the dividend, but that business's practices could affect how much profit there is to go to paying dividends each year. So everything that I've seen from the data, it suggests that there really isn't that much difference. And so I wouldn't choose a policy based on whether it's direct or non-direct recognition. The number one factor is going to be flexibility. Does it meet your needs for funding it? Are you able to fund it to their requirements? And if it is, great. If there's two of them that meet the exact same need, okay, now let's look at the historical performance. Let's see what the illustration shows long-term potential cash value growth. Let's look at their dividend rates. So that's where I would go from that point. Top Gun, Mass has the highest dividends historically, correct? Yes. Can you backdate those policies so you can withdraw in your first year? You don't need to backdate them to withdraw in your first year. Unless you're talking about my national life policy. That's the one that I can't withdraw in the first year. And no, you cannot backdate that far. You can't backdate that far. You can backdate 6 months, which in that case, yeah, after 6 months, I would be able to make another deposit. It would technically be my next year. And yes, I could withdraw from it. So, yeah, I guess the answer actually is yes. Now that I've play it out in my head, that would make it so you could. But there's not very many companies that limit your ability in the first year. And none of the whole life policy companies that we look to limit it. And Allianz does not limit you in the first year. Joseph, hello before bed. Thanks for popping in and saying hi. Okay, yeah, you meant my national life policy. Gotcha. Yes, you could. You could backdate it and then withdraw in the first year, but you would still have 6 months. 6 months to go. Trying to think. It would not. Well, it would be at least 6 months. It would be at least 6 months, because that's if I backdate it from the day before my next birthday. You can backdate 6 months for age. So. Fear Only One asks, how do dividends work? Good question. Dividends, the life insurance company figures out what profits they have for the year, and then the board decides how much of that profit goes to dividends. When they announce the dividend rate, that is a gross rate. It is not a net rate. So what you actually get credited will not be what they claim on the dividends. It'll be after the insurance expenses. And then they also tend to apply different dividend rates to different types of policies, or different types of, I guess you could say different types of insurance, what type of insurance it is. So what type you've bought. Guardian, I know offhand because somebody just did some digging into this and got a response from Guardian, and they had it broken out how much went to base premiums, how much dividends went according to base premiums being paid, and the different amount that went to paid up additions. So the amount that's in paid up additions got slightly different amount than the amount that goes to base premiums. So pretty interesting, and really it's up to the insurance company's board to decide how the dividends actually pay out. Nick says, how about now that they're similar in value, Hyliion or Neo? Good question. I'm more of a fan of Neo personally. I think they're in a much bigger market, a lot more potential, and they're already building way more vehicles. I mean, I think they're ahead of the game in that regard. Hyliion has a lot of potential, but other people are getting into that space. So you've got other more traditional manufacturers getting into that space as well. Doesn't mean they're going to be successful, but the reconfiguring of semi-vehicles, used semi-vehicles, I put a little more value into those original, the OEM companies that work on those diesel trucks. Like, they know those things in and out. They designed them. They know everything about them. So for them to retrofit them to run electrically, I imagine they'll be successful. Let's put it that way. So I think Hyliion will have some competition. Now, there's obviously a limit to how many conversions each of those companies can do each year, and it's a big enough market that I think Hyliion can still be successful. So I just think in the long run, Neo has greater potential because China itself is a much bigger market than what Hyliion's targeting. There is, beyond China, they can actually service the whole world at some point eventually, so they're not just limited to that. Whereas it is going to be a limited amount of retrofitting of diesel trucks. That they're going to run out of diesel trucks to retrofit. It doesn't mean that they can't pivot and do something else. So hopefully they would. But just from looking at where the two are at right now, I see more upside to Neo because of that. Top Gun, do you anticipate dividends going up or staying about the same? I actually think they'll probably stay about the same for a while. It's really hard to say. Dividends are based on the profits. Those profits get generated from, one, selling policies, two, other investments, outside investments. A lot of those outside investments are bonds. A lot of them are bonds because they're very safe. Some of those are in the markets. Some of those are buying other businesses. We're in a challenging business environment right now. So I don't anticipate them going up at any time soon. That's a really good question, though, because what's going to factor in to seeing those dividends go up? The bond rates are at super low lows. It's going to be a challenge unless bond rates rise. I don't know how quickly those bond rates will rise. And what you're going to see is insurance companies are going to have to reach out and do more and more junk bond investing. They're going to win some, they're going to lose some of those. Junk bonds don't always pay out. So we'll have to see. And it may vary by company. So you may see some companies end up making some good gambles and some companies don't. But traditionally speaking, insurance companies do not really gamble very much. Like, they only take a very, very small percentage of their overall portfolio and put it in anything risky. So, Fear says, do they always pay to the policy and paid up additions? Do they always pay to the policy and paid up additions? Yes. It depends. So most of these whole life companies that we do get dividends from, you have a 4% guarantee or you have the dividend. So if the dividend is higher than 4%, you'll get the dividend. If it's lower than 4%, you get the guaranteed rate. So I guess it depends on how you look at it. If you want to say, do they always pay to the policy and paid up additions? But yeah, paid up additions are like owning a whole policy in and of itself. You just bought a whole entire policy in one fell swoop. So they shouldn't treat it any differently or at least much differently. Like, they're not going to not give dividends to paid up additions. Paid up additions absolutely get dividends. That's part of the contracts. BDN, Hi Leon, maybe in 5 years. All right. Kyle, you guys got me in on Workhorse and Space. You guys rock. I think these are great calls. $20 seems like a steal. Yeah, good luck. Good luck. Nick appreciates you. Thank you. You're welcome. BDN, however, not sure about Neo's quality. I don't know either. I haven't driven any of their cars, but they look like pretty nice cars. Top Gun, sorry to go back to this, but do you think you could comfortably run stock, options, and alternative investments with your solo 401k simultaneously? Yeah. Yeah, I think you could do it. Comfortably, you would need to figure out a way to automate it. You would need to figure out a way to make it a little bit easier to track it. That's the challenge. So if I have a whole bunch of different loans out there, it definitely takes more time for me when those come in order to track them, put them in the spreadsheet. Because when I do a loan out for somebody, I do a spreadsheet and I have it to where it's updated. It puts in the amount of interest that gains daily. I put in a copy of the check, and we do it on a Google Sheet, and they have access to it, so they can always look at it. So it takes a little bit more work. And then not only that, but then I have that spreadsheet for their interaction, and then I also have a spreadsheet tracking all of those for the overall 401k. So it does take a little bit of work to keep up with that. It can get complicated, but adding stocks and options to it, not so much, because that work will get done by the brokerage firm. So you basically just have to put the money in there and take it out, and that's what you're tracking. So that one would be easier. Real estate might make it a little more complicated. Depends on what you've got to do for your investment, and how much different things you have to track, and then how many different real estate investments are you tracking. So yeah, all of that just depends. It can definitely get uncomfortable though if you spread it out too far. Key, has the guaranteed rate ever changed? If yes, what causes an increase? Lastly, if you have, say, a 4% guarantee, are you locked into it for life even if the rate increases? What about decreases? Good questions. Has the guaranteed rate ever changed? Yes, it has changed. It actually used to be a lot lower. I believe it was in the 2 or 2.5% range for a lot of years. What caused the increase? What caused the increase, I think, was insurance companies' need to provide more benefits and adapt in order to compete in the marketplace. So meaning Wall Street took off and they had to provide some better guarantees in order to get some of that money back out of Wall Street and working for them. So their products had to evolve. So lastly, if you have, say, a 4% guarantee, are you locked in for life, even if the rate increases? Yes. So your contract is locked in for as long as you have that policy. So that 4% guarantee will not change unless it says in the contract that it can change. I'm not aware of any that have that ability. Same thing with decreases. They can't just decrease it. It's locked in. It's part of your contract at 4%. And really every whole life company I know has that 4% guarantee. So Kyle, do you guys like Neo? Yes, I like Neo. Fear only one. What if you reach your mech? Okay, what if you reach it? You have a mech limit. You just don't want to go past it. So I get right up to my mech limit. I go right up to it. I pay as much as I can until they won't let me pay anymore. Doesn't have any ill effects. There could be a possibility that if the dividend rates get reduced in the future and I'm still paying that maximum amount, that it could cause a mech because of the dividend reduction in the amount of life insurance that it buys. So the dividends buy paid up additions. If your dividend rate goes down, you're not going to get as much paid up additions as they anticipated you were going to get. What that means is it can reduce where your MEC limit is at. If dividend rates go up, that's okay. That's not going to affect the MEC limit. It increases your MEC limit. But if it goes down, that's when you've got to worry. But it's really not that big of a worry. All it'll mean is you can't put quite as much money into it. Or the company may say, hey, you've got too much money, you need to pull some out, or it's going to become a MEC. So you can solve that problem if it comes to that. So not really a big deal. I think the goal is to reach your MEC. If you reach your MEC, what happens to the dividends? Doesn't affect it. Doesn't affect your dividends. You always want to try to get to your MEC. I mean, it doesn't affect your dividends negatively. You're going to maximize your dividends because everything you put into the policy up to the MEC limit is going to buy paid up additions, which increases the amount of dividends your policy is going to get over time. And every dividend you get increases your policy each year, and you'll get more dividends based on those dividends. Nick says he's been in and out of Neo. Probably will get back in. Like them long term, just seeing where the new floor is. Yeah, that one's a challenge to see where it's going to come down to. Seems like it's been getting some more interest from some major investors, though. So who knows where the new floor is going to be? That's one of the reasons why I like those long calls. You don't really have to worry about it. Don't really have to worry about the little ups and downs that are happening right now. You just know that long term, it's going up, and you're going to be in a position to benefit from it. So, all right, has everybody hit the like button? We are. Do I have long calls on Neo? Not yet, but I'm looking into it. I still want to pick up. I still want to pick up another long call on Tesla, and those are very expensive. So I'm planning on picking up another long one on Tesla before I start to do more on other ones. I have some long ones on Apple, Workhorse, and Tesla. I think that's it. Might have one on Blank still, which is a charging company. Let me take a quick look. I'll tell you. Oh, and Space, of course. Space. I knew I was forgetting one in there. Felt like it. Kyle, smart man. We're going to get rich. Hopefully we will see some profitability from these plays. Top Gun, how much does a long Tesla cost? Depends on how far out you go. Now, where I'm going, they're close to 20 grand. Close to 20 grand. So definitely, but that's like 2023. So we got 2.5 years. And I'm anticipating a lot of growth. You got to be really bullish on the company long term, and see that pay off. So I'll tell you more about it. I'll tell you more about it in the mastermind group on our Discord server. So if anyone else is interested, in seeing that, I'll tell you in the Discord group on that. I'll tell you in the Discord. If anyone's interested in following along on that, you got to join the Discord. And you do that by joining our Patreon. Tier 3 gets you into the mastermind group. It's $50 a month. Not very much, and you're going to get a lot of value from it. I'm going to start sharing all my trades in there, and I'm going to be making some significant money, very high percentages. So, I can share with you guys what I'm doing, but I can't tell you what you should be doing because I'm not licensed securities. So something I've got to be aware of. Mostly what I tell you about. Yeah, use it. I mean, I don't want to say it's for entertainment purposes only. What should entertain you is me doing it and whether I make or lose money. I guess that could be entertaining. But I don't. Most people, you see a lot of channels out there that always say, "Oh, this is for entertainment purposes only," when everybody knows it's not for entertainment purposes. They're trying to tell you how to trade. They just don't want to have any ramifications for it if you do it and you screw up and you get mad at them, which you shouldn't. I mean, you should know that they're just giving out their opinion, but it gets complicated. Yeah, UGG Securities. That's right. So I don't put out those warnings, but mostly because I tell you this is what I'm doing. I'm not telling you what you should do, because I don't know your situation. I don't know your whole financial situation. I don't know what your goals are. I don't know what your emotional capacity is to hold on to stocks or bonds if they're going down. I don't know what your ability is to ride the ups and downs of the market. So Top Gun says it's been a royal pain in trying to raise capital with the rules. Are you having is that something you're trying to do for your wholesaling business? You're trying to raise capital, having to deal with securities? That seems like a whole lot of red tape for sure. For sure. Kyle, where do you see Tesla in 3 years? I'm hoping to see Tesla at 1,000, 1,500 per share. I mean, it could be more. It depends on how quickly we get things ramped up. But we got 2 factories coming online next year, which should be a major boon to the stock price. All of the growth potential with the batteries that they're producing, all the vertical integration. I mean, it's just, I don't know. That's what I'm investing in Tesla as if that's what I'm going to see in 3 years. So that's my guess. Top Gun says, join the Discord, folks. Yeah, Top Gun is in there, and he's talking real estate. If you guys got real estate questions, he is the man. He's the man to talk about. He's got a lot of experience with wholesaling, doing some flips over there in Kentucky, and he's trying to raise some capital too, so he's probably got some investment opportunities if you're interested there. But yeah, so you join the Discord, go to Patreon, go to the link, the Patreon link. I am going to make YouTube channel memberships available that will get you access to the Discord too. So I got to check on that, see if it got approved yet. So pretty soon you might be able to just do it through YouTube as well. But we're trying to make it easy, for folks to get in there. You can join the Discord for as little as $1 and just chat with all the folks that are in there about the stock market. We have a few different channels. If you get in for the $5, there's only 3 tiers, $1, $5, and $50. The $5 tier gets you into the infinite banking and the dynamic banking channels, so that you can work with or talk with people who are also doing those things and figure out, hopefully you guys can interact and figure out the best way to proceed there. But I'm also available to interact in there as well. So I always check the Discord channel every day, and I'll respond to any questions that come on in there. But the tier 3 is our mastermind. I've got some big things planned for that. It's going to take a little bit to get them together, but we're going to end up coming up with some meetings. We're going to end up coming up with some meetings of that group so that we can address some specific goals that people have said that they're interested in. So in that, if you are in that group, make sure you've answered the poll question that's pinned at the top as to where you're looking at growing financially and what topics we want to address in there. So we've got some big things coming there. Top Gun says, wholesale, flips, rentals. Ask me about his free house. Free house. Nice. All right, so that's it for today. I'm going to play you guys out with some music. It's been a long day for me. Doesn't look like much more questions. If you've got any questions, feel free to leave them. You got to leave me a voicemail message. Go to the website, OregonCashflowPro.com. The pinned post, you can leave a voicemail recording, and I'm going to play it. If I play your question live on next Wednesday's live stream, you win either a book, one of the books that's in the comments, or that's in the show description, or something from my Teespring marketplace. So you can win a hoodie or a t-shirt or a bag or a phone case, something. We've got all kinds of choices there for you. So if you're interested in getting that, you got to leave a voicemail question, and if I use your question here on the air, you win. You win, and I'll be in touch with you then. So, Robert, thanks for the tip. Much appreciated. Nick, good night. Catch you next time, too. Much appreciated, Robert. With Tesla being so ups and downs, I haven't been getting any love from the live streams earlier in the day. But it's always nice to tip the dealer. Always nice to tip the dealer. Or at least join the Discord. At least join the Discord. Stalin, good night. Good night. All right, Top Gun, good night. Thank you guys for joining. I'm going to play you out with some music, and we will see you next time. I appreciate you guys joining us for this. Ciao for now.